Hello, Stewart Heath here, CEO and founder of Harvard Grace Capital, back with episode number 2 of the questions you should be asking your passive activity sponsor. Last week we started out with in questions about the sponsor himself, and we got another group of those today. There'll be all of these questions will be in 3 different categories: about the sponsor, about the deal, and about the finances of the deal. So last time we talked about who was going to manage the property day to day, i.e. who's the property manager, what's their history. Our first question this week is talking about who is the asset manager. And these are 2 different things. What is an asset manager? An asset manager is the person who's actually overseeing the property manager, whose focus is on delivering the business plan that the investors invested in. So it's a bit more of a strategic kind of a point of view, as when to replace the roof and when not to, which leases to adopt, or if there's something requested that's outside of the general parameters approved for the property manager to do. So who that asset manager is also very key. And a lot of times it can be the same person as the sponsor, as it is in the case at Harvard Grace. But the bigger the deal, the more players you have at the table. And so who the asset manager, it might be a third-party asset manager. But you need to know who that is. Similarly, if the next question is, gee whiz, if the key guy becomes incapacitated or passes or leaves the company, who steps in? How deep is their bench? That kind of thing. These are kind of obvious questions, but you need to know who the backups are, particularly an issue with smaller firms. And it may or may not be a reason to do the deal or not do the deal, but you do need to know who the next person in line is. I have mixed emotions about this next question, but it's an obvious one, and people always think it's very astute. How much of your own cash is the sponsor putting into the deal? In our case, we always take LP investment units, just like the other LPs. So we always have some cash in. But what a lot of people don't realize is that we got a whole lot of cash into the deal before it ever really comes to market for investment. There'll be earnest money, there'll be due diligence costs, which will be lost if the deal doesn't close. And the biggest really is usually the sponsor is also the personal guarantor of the debt, which is the largest part of the capital stack to begin with. So the sponsor should be, financially at risk, but sometimes they may or may not be taking the same risk as the LP. They might be taking a lot of different other kinds of risks. But then again, they might also be coming along with you, wearing your hat too as an LP investor. It's a good question to ask, but don't prejudge it, is my only point there. Next question is, how many of your investors have invested in additional deals? The sponsor may or may not, they may give you a number, but they're probably not going to give you references. Most investors are private. They don't want to be used as a reference, but a sponsor can have a statistic as to how many people have who reinvest in other deals. We have a few that have done every deal we've ever done. We have multiple investors in our deals, and we have some that's only done one. So they may have that. Again, it's an interesting question. It's not necessarily all telling. And our last question for this week is, how often will you receive updates? We do updates monthly on each deal. We try to keep that dialogue open. Many investors will just email us questions or request a phone call, and we're happy to accommodate that. I think you should seriously question anybody who's not doing at least monthly updates. even though our deals tend to be boring, a monthly update is still, we think, appropriate, just to make sure that so the investors know, hey, we're still here, we're still managing your investment and your dollars. I think there's nothing wrong with doing it monthly. A quarterly update in my world is just not sufficient. The market moves too fast, even in stabilized commercial real estate. Come back next time for another edition with more questions for the sponsor. Thanks for watching, guys.